Ladies and gentlemen, good morning. On behalf of KBC Group, I would like to welcome you all to Dublin. And also for the listeners and the viewers on kbc.com's live stream, a very warm welcome. We're delighted that you have accepted the invitation to join us today, wherever you are on the globe. Today we have one interest in common, and that's the interest in KBC Group. Every one of us wants to know how we're doing and how we will be going forward. So that is what we're going to present today, and we hope to have an interesting debate with you indeed. The agenda of today covers a wide range of very relevant items. We will actually give you an update of KBC Group's strategy, its capital deployment plan, and financial guidance. We'll also demonstrate how digital transformation will impact our business, what initiatives have been implemented so far, and what are our next plans. It's also no coincidence that we gather here today in Dublin. Indeed, as you know, Ireland has been defined as a core country for KBC Group a few months ago, and we are extremely proud to be able to be a catalyst for the Irish economy. So we'll detail and show you how we will implement the Irish digital-first strategy in this core market for us. We have 4 speakers taking the stage today. And since some of these faces are most likely new to you, let me briefly introduce everyone, which is on the slide here. As you know, the board of directors of KBC Group has recently appointed Mr. Erik Lutz as the 7th member of the executive committee and as Chief Innovation Officer for KBC Group. To stress the importance of digital transformation, the executive committee has decided this. And it is the first time in the history of the group that someone takes exclusive responsibility for this agenda. Erik began his career with our group in 1988 in the field of payments and e-banking. From 1996 on, he has been ICT manager for the branch network, ICT development, and ICT data center. In the mid-noughties, he was a member of the management committee of NLB in Slovenia, where he was responsible for ICT as well, and prepared NLB for the introduction of the euro. Upon his return to Belgium, he gradually moved to the role of Senior General Manager for HR, Facility Services and Financial Reporting. And in 2013, he was appointed Senior General Manager for Direct Channels and its support at the Belgian Business Unit. Additionally, he was appointed Chief Innovation Manager for KBC Group in 2016. And then now, we have Erik as Chief Innovation Officer. So Erik prepares and manages the group's innovation and digital transformation agenda, and also heads up ICT and the Shared Services Unit. Erik has behind him a comprehensive and international experience and has proven his awareness and alertness of what is going on in the ever-changing world around us. The second speaker of today is Mr. Rick Scherling. He's also a new member of the Group Executive Committee and the successor to Luc Popelier as Group CFO. Rick, who has taken over as Group CFO on May 4th, indeed, has built up decades of experience at KBC since he joined the group in 1984. He started at the International Credit Department in Brussels and then held various positions in the United States, Taiwan, Germany, and then back to the US in 1999 as General Manager of KBC North America. He joined ČSOB in the Czech Republic in 2006 and was appointed a member of the management board there and was Chief Financial and Risk Officer. Since 2010, he has steered our business in Hungary as CEO of K&H Bank and also the country CEO of Hungary. He has steered that country through some very difficult times and made our group there even more prepared for the challenges that lie ahead. So besides Rick's long professional and international experience, he has a very broad knowledge of our Central European core markets. So Rick is not only a business manager, he also has years of experience in finance roles behind him. The third speaker of today is Mr. Wim Verbraken. He's also taking the stage today. Wim has been CEO of KBC Bank Ireland since 2013 and has a long-standing career with KBC Group. He joined our group in '92 after being a career officer at the Belgian Army with the Engineering Corps for a bit less than a decade. Within KBC, he has been fund manager in Brussels, project finance transactor in Dublin and in New York, general manager of the KBC Hong Kong branch, senior MD of Absolute Bank in Moscow, and CFO and COO at KBC Bank Ireland before assuming the current position of CEO here in Dublin. Wim has steered the Irish operations through the difficult economic circumstances and laid the foundation, together with his team, for the digital-first strategy of KBC Bank Ireland. And finally, I assume Mr. Johan Thijs possibly needs the least introduction. Johan has been KBC Group CEO since 2012 and has been a member of the Group Executive Committee since 2009. I am convinced that for Johan, we can skip a lengthy introduction. The track record of KBC speaks for itself, I'd say. We aim for these presentations to finish around noon. The live stream will end then, but we want to allow plenty of time for questions to the speakers of today as well. So Q&A sessions will be organized. Finally, we will also open the innovation zone in the back, where you will be able to see and test some of the digital initiatives yourself. And no, of course, we haven't forgotten about the current fashion of a balanced lifestyle. There will be lunch served as well, and this will be offered with the executive committee members present as well. So next to the speakers, you'll also be able to meet Daniel Falca of the Belgian business unit, John Hollows of the Czech Republic business unit, and Luc Popelier, who's now heading the International Markets business unit. As a small reminder of the house rules, let me suggest don't forget to unmute your cell phones after the presentations. And Wi-Fi is available in the room. It's without a passcode, so you can use it if you want. You might see a tweet passing by every now and then. And now, it gives me great pleasure to be able to introduce to you the first speaker of today. So ladies and gentlemen, a very warm welcome to our KBC Group CEO, Johan Thijs. Johan, the floor is yours.
Thank you very much, Wim. Also from my side, ladies and gentlemen, a warm welcome to Dublin. And warm is probably the right chosen word these days. Yeah. You would not notice it today. When you woke up, it was raining. But they promised us it will be 27 degrees later on. So if you go out after the investor event, notice the weather. We had an investor day in 2014 when most of you were present as well, where we actually introduced our, at that time, strategy. Now that's 3 years down the road. And in those 3 years, a lot of things have been happening. And when we were reviewing the period between 2014 and 17, and clearly we're also anticipating what was going to be our, let's say, future for the next coming years, it was clear something fundamental is different and something fundamental has changed. In essence, you could summarize it with this slide. You know, we are in an environment which is continuously changing, and you can say that about different aspects. First of all, I mean, our financial industry is heavily regulated, and that regulation keeps on going. You know, when I mention some of those, IFRS 9, IFRS 4, MiFID 2, perhaps even Basel 4, God knows. These things are happening on and on, and obviously, regulation we have to adhere to. That's part of our life, as is the macroeconomic development. The macroeconomic development has also changed over the last few years and also over the next coming years. The prediction is in Europe, depends on the source, it grows between 1.5% and 1.6% of GDP. Fortunately, KBC is in The majority of this country confronted with economic growth which is double of that forecast of the European zone. So in that respect, we're quite fortunate. But that will be probably a given as well, and obviously influences our performance over time. And when I say that digitalization is a given, nobody in this room will be surprised. If I would ask the question a bit differently, I would ask, who of you guys doesn't have a smartphone? Nobody will say, oh, raise his hands. Can I do the test? Has everybody a smartphone? Huh? Originally, I was saying, listen, I dare to bet my year's salary that everybody has a smartphone, but I thought afterwards, you never know, okay? Digitalization is a given, and that's something which is true for our customers as well. And that competition is there is also a given. But what is the far most important thing on this very same slide is this part. Changing client behavior. And clearly also changing client expectations. That is what really matters. All the rest, sideline. Customers are fundamentally different to what they did and how they behaved 5 years ago, even 3 years ago. And the change of customer behavior goes faster and faster and faster. And for that reason, we updated our strategy. And that's what we're going to explain today. It's all about client behavior and how to deal with that. And when you look at, and Ben used it in this introduction, when you look at the track record of KBC over the last couple of years, you could indeed say, okay, we did quite okay. So if you take both elements into account, changing customer behavior, the track record of KBC, it's obvious that if we update our strategy, we take into account both elements. So therefore, if you would ask me to summarize what you're going to explain today in 6 words, it would be this. It is more of the same, but differently. More of the same because of our good track record. Because our model, our business model, has showed evidence in the recent years that it works well and that is appreciated by our customers. Our business model shows that it is also there for the longer term. So more of the same. But because customer behavior is changing rapidly, we need to fill it in for next coming year differently. And that's the summary of the whole day. So if there are any questions, I would be glad to answer, because otherwise I could stop here. No? Okay, let me continue a little bit. What does it actually mean? Let me start with what is the same. Our strategy intrinsically is the same. We will be, and we are, a bancassurance, and that's what we're going to be for the next coming years. We will be a bancassurance who is going to focus on growth, but in a profitable, sustainable manner. So profitable growth is key. And yes, if we have to choose, it will be the profitability, which is key. And we will pick up our role in society by putting our customer at the center of what we do. The customer is center stage. That's it. And that is what we did in the past. Now, everything is built upon what I consider the most important part of the way KBC Group works. If you really want to understand how KBC Group works, you talk about the Pearl KBC culture. Because that drives 38,000 people in the past, and that is going to drive 43,000 people tomorrow. Why 43,000? UBB is part of our group since a couple of days. And in essence, that remains the same. So this will be the way forward, business-wise, model-wise, strategy-wise. Let me go a little bit more into detail. What does it actually mean? It means, for instance, that we are a bancassurance in a very specific way. We are a bancassurance which has an integrated business model. We are, most of the time I say in conferences, listen, we're the only one in the world who does it like this. And never until now, somebody said, we do exactly the same. We are fully integrated, which in essence means that if you set aside the banking product factory, there where we manufacture our banking products, our mortgages, commercial loans, trade finance products, asset management, if you set that aside, it's do exactly the same thing on the insurance side. So the manufacturing of MTPL, GTPL, homeowners insurance products, life insurance products. If you set those two aside, integration means everything else that I did not mention is put under one hand. So we only have at KBC Group one accounting department, one controlling department, one marketing department, one commercial department. We only have one group CEO, only one CEO for the bank and insurance company. We only have one CFO, CRO, and so on and so forth. Everything is under control of one hand, which means that we can approach our customers in a unique way. We can approach them with actually a fulfillment of their needs with financial products, both on the bank and insurance side. It does not matter how we fulfill it. It depends on what the customer wants, what he needs, and if we can fulfill it with KBC products, it's fine. It doesn't need to be necessarily a banking product, not an insurance product. We approach the customer from one angle, and that is the customer angle. And that makes the big difference. Besides that, the integration has big advantages on the basis of cost synergies. If you only have one IT department, no overhead on an IT department on the banking side, nor on the insurance side. Same is true for accountancy. The same is true for everything. You can create economies of scale. Next to that, next to the cost synergies, obviously you have commercial synergies, because you can approach the customer with the whole package of products, with the whole portfolio of products. And you can offer, and that is very important to understand, you can offer the customer a one-stop shopping. Customers have dreams, and they want us to fulfill those dreams. Most of the time, they need money for that. We can provide that from the banking side. And once they have their dream financed with somebody else's money, our money for instance, they're indebted. And you know what happens if there's a windstorm and their big dream being their house is blown away? They're left with a nasty debt. So you need to have something else which can protect them from that disaster. And that's our insurance side, which we can offer in an integrated way. So we guarantee their dreams, but also can protect them. And that is the commercial advantage of this model. Last but not least, when I was explaining this 3 or 4 years ago at the ECB, there was some doubt on the regulation side. What do you mean with a bank insurance model? You know, it's a bit complicated, different métiers, they're right. That's the reason why we keep the product factory separated. But in the current environment, the diversification of being a bank insurer, diversification in income, diversification in risk, in a low interest rate environment, it clearly pays off. And straightforward today, I don't have any discussions whatsoever with the ECB anymore about what's the added value of a bank insurance model. It's a given. Anyway, it's clear and obvious that in an environment like this, a bank insurance model gives you diversification of income, which is a big, big plus. In terms of our growth and in terms of our sustainability, more of the same as well. We stick to what we did in the past. That is, we will further grow our business, banking and insurance side. But in doing so, we diversify our income by going more into non-interest bearing income, which can be generated through, for instance, non-life business, non-life insurance business, risk life insurance business, or fee business through asset management, banking services, and so on. That's what we already did for a couple of years. But we are going to enhance that, and definitely in the Central European entities, we are definitely going to push for more. That's something also which is appreciated by our customers, because that's what we see in the feedback of customers on how they are served, both banking and insurance products. NPS scores are in that respect always very good. What we are also going to continue, that is our current geographical presence. We are not going to go into new countries. I mean, it has been rumored for a while, KBC is going to invest in country X, Y, or Z. It's not going to be the case. We stick to our 6 core countries, and for a good understanding, that's Belgium, Czech Republic, Slovakia, Hungary, Bulgaria, and Ireland. And what we're going to do is to enhance our positions there, both on the bank and insurance side. So if we are going to look into potential acquisitions, they will be bolt-on M&A transactions. So bolt-on acquisitions to enhance our position both on the bank and insurance side. And as we always have been doing in the past, we will continue to do that in a very strict manner, which means we will assess it on a strategic level. Does it make sense to put that acquisition into our group? We are not going to invest, for instance, in buying an investment bank activity. Why would we? So if it fits strategically, does it then fit also from the financial perspective? We have very strict criteria on the financial side. Does it fit the ROE target of the group? and does it fit the RO investment, ROI target of the asset itself? And that will be looked into from the short, but also from the midterm perspective. What it means in practice, look what we did with UBB. That's translation in reality. And what is very important, and that's something which we launched back in 2012, we emphasized in 2014, that's what we call the performance diamond. That is how we do steer our group. In essence, it's quite simple. Every entity, every business entity, bank, insurance, asset management, in the client segments, retail or SME or whatsoever, is steered in the same way. They all have the same set of targets, internal targets. And that is based on 4 parameters. We have targets everywhere for profitability. We have targets everywhere for capital. We have targets everywhere for liquidity. And last but not least, we have targets for what we call people. Now, people are employees, clients, and what we call stakeholders at large, shareholders. And the last 3 groups are judged on how satisfied are those. You can translate that into NPS, you can translate it to other parameters, but what is far more important, the 4 parameters are of equal importance. So we don't pick out one, for instance profitability, and neglect the others. It is a balanced way of steering it. And it's a balanced way of steering it within a risk management framework which is controlled from the center. Now in doing so, it means that every country has the same set of parameters to be judged upon and has the same set of parameters which they have to fulfill and to achieve. The nominal level can be different. If we have a return on allocated capital targets, obviously, it's obvious that, for instance, Bulgaria has a different target than, to say something, Czech Republic. Now, in doing so, we want to be amongst the best performing financial institutions in Europe. And that's our main goal. Service clients better, but also in the long term. And for being there in the long term, you need to be amongst the better performing financial institutions in Europe. And that's on the back of the performance diamond. Now, what is going to be different is what we did in the past, think client, that's now going to shift. It will be fundamentally different the way how we do it. It's not about the what, it's about the how. We will be thinking client in a digital way. Let me summarize that sentence. It actually means that what we're going to do is based upon, let's service the customer from the front end and of the back end of a system as if it was a pure digital sales process. It does not necessarily mean that we're going to sell uniquely via a digital channel. Not at all. It's the freedom of choice of our customer who goes into our distribution model. We have still tomorrow bank branches, insurance agencies. We will still have, obviously, smartphones, online applications. We still have a call center. We all will have them available for customer in an integrated way, which means he can choose, and all the information which is left behind in one of the distribution channels, for instance, a bank branch, will be shared in all the other channels. If he goes for a negotiation of mortgage in a bank branch, comes back home, talks to his partner, says, let's take the mortgage, he can sign it off on his iPad, on his smartphone, whatever, on the back of the information which he left in the bank branch earlier that day. That's the integration. But what is important is, what we are going to do differently is how to serve the customer on that basis, but with a different back office, which means fundamental simplification of our offer. Simplification in terms of products, simplification in terms of processes, simplification in terms of procedure. It must go faster because a client which wants to be served digitally doesn't take care of the hassle of the fuss which we have in legacy system in the banking industry. And that is going to be a fundamental change. I think this one single sentence is costing and requesting a huge investment. And Erik will later on explain what we are talking about. Does it mean that we are not going to go into, for instance, robo-advice? The answer is yes, we will. But we are going to emphasize that also in the future, human contact will play an important role. The difference will be that human contact goes hand in hand with technology, with, for instance, artificial intelligence, with, for instance, robo-advice. And you can look at it in 2 different ways. You can look at it, the machine, the robo, the robot gives an advice to a customer. That's a possibility in the future. But it can also be that the robo-advisor is advising the advisor in the branch, which then translates it to the customer. And actually, if you take into account all the regulation, if you take into account, for instance, MiFID II, and you need to give an investment advice to your customer, it's no big surprise that we're going to use a robot to advise our advisors. You need to take into account as an advisor regulation, the profile of your customer, the circumstances on the market, the product which the customer currently has in his portfolio, the potential offers, the change in his profile, and that you have to keep in mind, advising the customer on the single moment that he is sitting in front of you. Be my guest. And if you do it wrong, you will have the supervisor on the back finding you for mis-selling. So what we're going to do is bring that all together, including artificial intelligence, including a robo-advice, two ways. Potentially direct to the customer, but definitely also advising our advisors in the branches. What we are going to do next was picking up a role in society. Already talked about fulfilling customer dreams and then ensuring it so that's fundamentally safe. But also we are going to look at the sustainable way how we do business. Long term is our mission. We are there. Customers trust us our money. Their money, sorry. No. And we are going to manage that. But when the tomorrow request for refunding them the money which they put on our banking accounts, we need to be still there. We need to be rock solid, and there cannot be 1 single second of doubt. That's long term. That's a guarantee a customer actually asks from us and expects from us. We translate that in the word trust. And that's what we learned in the crisis back in 2008. That is something which banks cannot afford themselves. That is lack of trust. We are there to stay. We are there to be a sustainable financial institution. That's the reason also why we want to be amongst the better performing financial institutions in Europe. You have also other aspects of sustainability. And those aspects are actually mentioned here in this part of the graph. You have obviously your direct impact as a financial institution, as a company, as an enterprise on environment. Yes, we have 43,000 people. Yes, they drive cars. Yes, they consume paper, electricity, and so on and so forth. Yes, we have a carbon dioxide emission. Yes, we want to bring that down to zero if possible. But what is far more important is that we can also have a positive impact on society. And a positive impact on society is how we deal with business. How we deal with our customers in, certain aspects. And when we were discussing this a year ago, we said, listen, as a financial institution, let's not do everything. Let's focus. And let's focus on those things where we, as a financial institution, can be relevant, have impact on. And we defined 4 areas. Let's work on financial literacy. And you can take it quite literal. Financial literacy is really understanding the products you buy. Or understanding the products you buy, and now it comes in a digital environment. Because I think we are creating a new kind of people who are probably not familiar with the speed of development. And that's also a role for us. Bring them on board. That's what we currently do at KBC. Another one is obviously everything which has to do with the environment. Last but not least, stimulating entrepreneurship. That's a core of our activity, which we started up in Belgium and now has been rolled out in the whole group. You know it in Belgium under the word started at KBC. That has been now recouped and has been implemented in some of our countries in our group. But what is behind it is we are there to stimulate economy. We are there to stimulate people to become entrepreneurial and start up their own firm to invest in economic development. And then something which is then split up over the group, 2 different angles. Depending on the maturity of our countries, in Belgium, Czech Republic, we'll be focusing on everything which has to do with aging, with longevity, and develop products for that. The other part of the group is going to focus on health, taking care of your health situation, and develop products, services which accompany all those elements. That is impacting the positive way our society. And then last but not least, this does not mean to be a PowerPoint. This does mean to be embedded in the genes of every employee of KBC Group. we have to influence the responsible behavior of everybody which is working in a group. If we act, it is acting according to what is mentioned here. But it's also acting according to this, our company culture. When we established this in 2012, I remember those days, some people were quite hesitant, amongst others, analysts as well. Why are you doing this? Because 2012, face it, Euro crisis, still a lot of fuss going on in financial markets. But we are convinced that in the meanwhile, this has been the main driver of the transformation of KBC Group. Every word, every letter has a word. The P stands for performance, the E for empowerment, the A accountability, the R for responsiveness, and the L for local embeddedness. And everything has a particular meaning. 38,000 people in KBC Group know what it means. They know that these imperatives are the one which we need to adhere to. Because at the end of the day, everything boils down to the customer. Performance means what you promise you deliver. Accountability means that you as an individual employee are responsible for achieving that. Responsiveness is proactively fulfilling customer needs. And what we do with local means that we take into account the difference between the different entities where we are working in. We are not a global firm which pushes through a product which is developed at the center and we implement it in each and every country in the same way. Because how you can fit that into customer centricity? It doesn't make sense. So what we do is we take into account the local elements of each and every country, and if you combine the local embeddedness with responsiveness, you get local responsiveness, which means that we treat Bulgarian customers differently compared to, for instance, a Slovak or, for instance, a Walloon in Belgium. We take into account specific needs, which does not mean that we are not using economy of scales, but that will be a little bit different here and there, tweaked here and there. One I skipped, because I think this is the main strength of KBC, that's empowerment. We actually push our staff to become entrepreneurial within the risk framework, within certain boundaries. And that's the main reason why we changed so fundamentally over the last couple of years, because that's really picked up by a lot of our staff. When we were winning some prizes last few years on innovation, I was interviewed recently by a magazine, business magazine, and they asked me, congratulations with winning the prize. You must have actually an innovation office. And in your innovation office, could you tell me how many people are working in the innovation office? Now the answer is quite simple. We don't have an innovation office. But we have 38,000 people working on innovation. Everybody can be innovative. Everybody is pushed to be intrapreneurial, to be an entrepreneur within the group. And that has really paid off over the last couple of years. What you see behind the curtain in our innovation zone is precisely that. That is innovation brought forward by our own people, our own staff, which can be the idea of the moment worked out in full detail afterwards. And that's the strength. That's the strength of this company culture. Now, until now, it's all PowerPoint. Until now, it's all what we say we can do. I think it's time to switch to what it means in reality. What does all of this mean in reality? What does mean more of the same, but differently? And to do that, I give the floor to our CEO here in this great country, Wim Verbraak.
Thank you, Johan. Good morning, everyone. You're very welcome here in Dublin's Grand Canal Docks, or more commonly referred to as Silicon Docks. It's indeed a location that has become very popular in recent times among tech and multimedia multinationals. We're actually very close to our own head office here, but we're surrounded by such global companies such as Google, Airbnb, Twitter, Facebook, LinkedIn. And these references to these companies are actually quite relevant, quite pertinent to KBC Bank Ireland, because we are trying to build a customer-centric digital-first bank. If you look at the Irish banking sector, and indeed KBC Bank Ireland, you would notice that there's been a lot of change in the past couple of years. We have been operating in this country for more than 40 years, but we were traditionally a corporate bank with a very large home loan portfolio on the side, originated through intermediaries. And it's only over the last 4 years that we have transformed into a full-scale retail bank. KBC came out with that retail offering right around the time that Ireland came out of a deep recession and the banking sector was actually contracting and consolidating as a result of that crisis. So where are we at about 4 years into that process? We are now offering a full suite of banking products to retail customers. Our products cover day-to-day banking, access to credit, saving, and investments. Our products are simple and straightforward because that is what our customers have told us they want. We're a bit different from other entities in KBC Group in that we distribute insurance products, life and non-life, under a partnership model. Over the last couple of years, we have increased our market share. In terms of stock, we hold 10% of retail assets in this market. And our liabilities have doubled over the last 4 years. And when you look at the current production level, we actually generate more than 10%, originate more than 10% of new mortgages in this market. And when you look at current accounts, 13% of all current accounts opened in Ireland are with us. And the response from consumers has actually been very positive. We are adding more than 30,000 new customers to the bank, and today we're very close to 250,000 who bank with us. Our brand awareness is going from strength to strength. As a relatively unknown retail brand, we're now trending above 70% in awareness in this market. KBC Ireland is operating a very different model, and probably one of the best illustrations of that is our distribution model. When we designed it, we took a non-conventional approach and thinking much more retail than bank. Our digital and mobile channels are used by customers to open day-to-day products and access service. Our contact center is actually supporting these mobile and online channels. And through inbound and outbound sales and service teams, we actually, the call center actually performs a bridge function between the digital and the physical world in our distribution model. And today there is a lot of talk about digital, but we strongly believe that there is still room for the physical bank branch, or hub, as we would call it. Our hubs, our 15 hubs across the country, probably push our challenger spirit the most, in that they look very different from what you would expect a bank branch to look like. And some of you had a chance yesterday to visit our hub in College Green. Our hubs are cashless, they're heavily digitized, and still they've been designed in a modern and open way without high counters. Our hubs are actually places where customers can talk to us about their financial needs. So in short, our distribution model is providing our customers with the right mix between digital and physical channels. When we look at the future, what does this hold for KBC in Ireland? Only recently, and it was referred to, in February, KBC Group confirmed its commitment and made Ireland one of its core markets. Our strategy is fully aligned with the broader KBC Group strategy as outlined by Johan earlier. We will continue to operate our unique omni-channel model that I was just referring to, but we will continue to challenge the digital role that can be played within that. Our value proposition is differentiated according to 3 metrics: instant, accessible, and proactive. And I'll talk about that later. We will target retail and micro SME segments customers with a compact product set. Our ambition is to achieve market share relevance of at least 10% in these segments. And we will target primarily customers that have a higher propensity to switch, hold multiple products, and have a preference to bank digitally. We will also be different to the other core markets in KBC Group, in the sense that we will be a front runner in the digital transformation of the group, a place where digital solutions will be tested before further group-wide rollout. And then finally, as I was referring to, we are distributing insurance through partnerships. We have very good relationships with Irish Life and Zurich, and we will continue to nurture these through further collaboration and business development. Before going into detail on our strategic rationale, let's have a look at Ireland as a country. Granted, Ireland has had its problems. The financial crisis hit the country and its population quite hard. But the reaction, the redress that was spearheaded by the government is producing results. The recovery is taking hold and is now happening faster than anywhere else. I probably don't have to tell you that Ireland has the strongest economic growth in Europe. In that context, it's probably worthwhile mentioning that Ireland offers additional diversification to KBC Group because its economy is less correlated to Germany than some of the other core markets. Obviously, we were all surprised by the outcome of the Brexit vote, and the assessment of the impact of that decision is still pending. Ireland, as the island behind the island, is obviously very dependent on Britain economically and logistically. But we believe that there's also opportunities for this country to access markets that are currently untapped. And I can assure you that Ireland as a country is very mobilized for the Brexit negotiations that have just kicked off. You probably also know that the demographics of Ireland are very strong. Ireland has the youngest population in Europe, 40% below the age of 29 years old. I just learned yesterday that for every pensioner in this country, there is 5 people working. This young population is also highly educated. Ireland is one of the biggest spenders on education in Europe. This plays to our strengths because we want to be a digital challenger in this market. Digital adoption by consumers is happening faster here. We have the highest mobile usage in the Western world. Ultimately, the outlook on business is very positive. Just to quote one example, the mortgage lending market is expected to double in the next 3 to 5 years as property supply finally catches up with demand. And it's fair to say that all the indicators on Ireland are now trending more positively than at the time in 2013 when we launched our retail proposition. What are we observing in the Irish market? There is still a very low level of customers switching their banks. And by the way, KBC Bank Ireland, because of their different approach, is capturing the bulk of the switching that goes on. So consumers have to be heavily persuaded to move their banking relationships. At the same time, there is also very little differentiation among the main traditional banks. All offer similar products and services. You can figure out the causality factor here. Where there is this type of challenge, there is also an opportunity. The KBC brand and reputation came relatively unscathed through the financial crisis. And not only that, KBC Bank Ireland has been ranked the best retail bank in terms of reputation for the last 5 years in this market. So we believe that if there's going to be a challenger, if there's going to be a disruptor, a differentiator, that will give consumers the choice the value and the convenience they crave, that opportunity should be ours. But to be relevant in the life of our customers, we cannot rest on our laurels. And that is why over the last 12 months, in the run-up to the decision by group, we have asked ourselves some key questions. First one, what type of bank do we want to be going forward? Second, how do we create a basis for sustainable differentiation and stay ahead of the competition? And on the back of that, we developed a value proposition that we believe is truly differentiated and stepping away from the going norm and really based on what consumers want. So what will we offer Irish consumers? Captured in one sentence, we will bring a new way of personalized banking to consumers that offers seamless integration of channels with immediate fulfillment at the place and time of the customer's choosing. That captures the whole strategy. We did not come to this view of the future on a hunch or based on gut feeling. We validated that strategy externally, and we made sure that customer input was taken into account in our design. We run focus groups to validate and to test our strategy. And we asked our customers, but also consumers, what they viewed as the new normal based on their interaction with non-banking platforms. So while there is little mobility and little trust in banks generally in the market, we really wanted to know what they would move for. And the reaction from consumers who did not know that it was KBC's plan was actually very positive in the sense that they are looking forward for the face of banking to change. And they told us ultimately that KBC has the permission to pave the way in this. What will this mean to our customers? We will provide immediate access to funds to our customers. Through partnerships with external solution providers, our account opening process will allow for an automatic and immediate verification of customer credentials so that we can set up the account and provide our customers with a card in their digital wallet. We will provide instant decisions on their applications to obtain credit. We will do so using external data providers such as social media and the credit score registry. This means that for a mortgage loan application, we will provide a decision in 3 hours, and for a personal loan within 1 hour. No bank in Ireland is providing this today. And we will take that digital experience even further, end to end, for our customers to include documentation and correspondence. Secondly, we will be accessible for our customers on a 24-hour, 7-day basis like no other bank in Ireland. This means that if at 3 a.m. in the morning a customer wants to open an account, he can do so using our mobile app. And if during that process or afterwards he has a service or a sales query, he can call our contact center and discuss it. Mobile will be the primary mode of engagement with our customers. Our mobile app will be equipped to do everything that it needs to do for our customers to bank with us. And then thirdly, we will provide a truly personalized experience to our customers when they interact with their bank. And again, we will achieve this proactivity, having the most relevant conversation in the right context at the right time with our customers. We will achieve that proactivity using internal and external data to make that interaction as relevant, as insightful as possible. And then finally, to tap it off, we're aiming to provide our customers with complete solutions. That means, for example, that we will no longer look at a customer as wanting a mortgage, but we will look at the end-to-end process of that customer acquiring a new home. And I hope that you would agree with me that delivering on these 3 parameters would really raise the bar for our industry. Let me highlight one tangible example. today we are previewing the first new customer differentiator. You are the first to see, you will be the first, sorry, to see our new onboarding process, something we're quite excited to share with you. Our new version, our latest version of our app has re-engineered the entire customer experience, the entire journey of what it means to open an account. We have taken an innovative approach using external providers to reduce the number of steps that a customer, a prospective customer, has to go through from 26 to 5. Essentially setting up an operational account within minutes. No other bank in Ireland is even close to be able to offer that. And we believe this is really going to be a game changer. Why are we taking this approach? Again, because customers have told us they want a process that puts more onus on us and less effort on them. Later, during the section presented by Erik Lutz, our Director of Innovation, Eddie Dillon, will take you through a live demo of that app. Sorry. What will enable KBC Ireland to deliver on these ambitions? We believe that the answer lies in the following. One, having the right technology and infrastructure in place, both at the back end, but also at the customer-facing front end. Secondly, having precise partnerships with external solution providers, because we believe that banks are not best placed to engineer and build every component of the solutions that they offer to their customers. And then finally, in our case, to draw on the collaboration within KBC Group. And to expand a bit on each of these dimensions, we have already committed to a new core banking platform with Temenos. This platform will provide us with a single backend system, but more importantly, with a single holistic view on our customer, allowing us to really provide a personal service. We will continue to work with fintech companies like we do in case of the onboarding app, and we will seek to bring on board plug-and-play innovative solutions that drive our challenger spirit and allow us to be first to the market. And then finally, we will continue to draw on the learnings and the synergies that we can find within KBC Group. And one of the best examples is our mobile app. It was originally developed by our colleagues in Slovakia. We brought it to Ireland, we enhanced it, we adapted it for the Irish market, and it since has traveled to our colleagues in K&H in Hungary. And we want to do more of that. As a challenger, we know that we have to stay ahead of the competition. And we believe we can do that by constantly talking to our customers, really understanding what they expect from their bank of the future. Also, by moving faster, making quicker decisions. And we believe that our size, our setup, allows us to be more agile and indeed transform faster. And then finally, to adhere to our challenger spirit, our non-conventional approach to things, something that would be quite apparent if you would look at our advertising and our messaging to customers. What has been our track record thus far? I think you've gathered by now that we've gone through a lot of transformation in the past couple of years. Not only have we returned as a bank to profitability in 2015, 1 year earlier than expected, but we have also launched a new retail bank that is now gaining traction in the market. Our brand, still relatively young, is seen as dynamic and different, with something new to say. We are the new kids on the block, but at the same time, we're being seen as part of KBC Group as the bank, more than anybody else, that can deliver that different experience. Our products are straightforward and simple and offer the potential for deeper relationships, which is what we are seeking. I've already spoken about our omni-channel approach, and truly what this gives to the customer is back control to him or her in how they want to interact with the bank rather than the other way around. We were the first bank in Ireland to offer both Apple Pay and Android Pay, making payments, making payments simpler than ever before. And the reaction to that launch was quite remarkable. There were more than 2,000 customers registering for Apple Pay on the day of launch. Our approach also allows us to be more disruptive. An example of that, last year, we partnered with the leading property search website to bring virtual reality to our customers. It essentially allowed prospective buyers, when they had identified a property online, to visit that property virtually from the comfort of their own home. We're also increasingly earning external recognition, whether it is about the design of our products, our services, or a new digital initiative. They are being recognized as innovative, as being first to the market, as disruptive. So this is definitely something that we can build on. How have consumers responded thus far? We have overcome some of the switching inertia that has bothered traditional banks, and we are adding more than 30,000 new customers to our bank every year, and it's the intention to increase that pace as we roll out more innovative applications. Our brand awareness, as I said, has been trending upwards gradually. It was around 20% when we first started tracking that in 2011, and as late as Q1 2017, it was at 73%. Our Net Easy score, which is equivalent to a Net Promoter Score for all account openings, which we cover on a monthly basis, has also increased as we enhanced our offering and made certain improvements. And my final slide, capturing essentially what we would view as success ultimately. It's our ambition to grow our customer base to at least 425,000 by 2020. And at the same time, to increase the average number of products that a customer would hold with us from 1.6 to 2.2. This means that the operating revenue of the bank as a whole will grow by more than 7% every year between now and 2020. The new retail bank, after 2014, accounts for 20% annual growth in that. That growth of the new retail bank, in combination with adequate cost control, will bring down our cost-to-income ratio to below 60% by 2020, despite a continuing investment program and an increasing burden of bank levies here in Ireland. The recovery of the impaired portfolios, legacy portfolios that we have, will continue to be an area of focus for us as a bank. The legacy, which accounts for all the business that was written before 2014, performing and non-performing, represented 94% of the pre-provision operating profit in 2016. So it was a very significant contribution. That contribution will continue to be quite important, albeit declining as the volume and the fee momentum in our new retail bank will increase. And essentially, our new retail bank will grow to about 63%, about 2/3 of our pre-provision operating profit by 2020, about 85 million, on its own account. To cap off this presentation, I would like to say that as a challenger brand in this still quite conventional market, our ambition is to raise the bar for the industry, to push boundaries, all the while we play our role in society. We know that our ambitions, the ambitions that we have set out, are quite significant, and that it's all about the pace of transformation, but we believe that we're up to that challenge. We know that we probably have to transform further down the road, again, rethink the basis on which we operate. And my final statement would be that for us here in KBC Bank Ireland, the future is not about rethinking the present. It's about reimagining and reshaping it. Thank you for your attention. I'm sure we will see each other later for Q&A. And with that, I'm going to hand it over to Eric Lutz. Thank you.
also, on behalf of me, welcome in Dublin. I would like to start my presentation with a referral to a book which was written a few years ago and which had a quite provocative title, and it was called Bye Bye Banks. In this book, the author states that technology has the potential to change the financial landscape dramatically and probably to wipe out some of us. Now, lucky for us, the author also states in the title what banks can do to survive. Now, just surviving is not a very bold objective, actually. So let me rephrase it for KBC. In a digital world, we want to be the reference. We want to exceed customer expectations. Because, yes, digital is important and the evolution is impressive. And we have thousands of fintechs and we have a lot of big techs fighting for a turf. But it is not at all about technology. As you saw before in all the speeches, what matters is customer experience. Go one back. So customer experience is extremely important. That is also the reason why we think that KBC Ireland can be a front runner. Wim explained that. Not the biggest on the market, not the smartest in technology, but we know very, very well how to integrate and how to use technology and to make out of it the best possible customer experience. So you might wonder, why is on the second line then this digital first strategy? As Johan explained, digital first does actually not mean that we are going to become a digital only bank. It means that we are designing according to digital principles, as if the entire process, wherever it runs, in a branch, in a call center, in a mobile, wherever it runs, it is a digital process. And let me translate it to customer experience. It is fast, easy, and personal. That is what we want to achieve. Now, probably you have heard all of this before. So, then again, where is the difference? The difference is in the third line. It is all about execution. Because a strategy can be very fancy, but it is only inspiration. It's important, but it is only inspiration. And inspiration, as you know, is 5% of the work. The rest is called transpiration. That's what we did for the last 3 years. We were working excessively on being effective in execution. Because a lot of you worry about legacy ICT systems, and I understand that, and I come back to that. But what about legacy organizations? Perfect for today, unable to deliver for the future. So that is the difference between KBC and the rest. We have been working on a delivery structure which can go to market extremely fast. If you come to KBC, you will find not a central innovation team. You will find a lot of teams, mixed disciplines, IT people, product people, process people, legal people, designers, all into one small operational unit. And you know what their mission is? You can guess. Customer experience. They are all working on very interesting questions like, how do I get a loan in 20 minutes? What happens if I lose my debit card? And even what happens on my 18th birthday? That is the focus of our teams. And we ask them to be not only smart and to exceed customer expectations, but to go to market as fast as possible. Every 6 months, KBC delivers 40 to 50 projects of that kind, all focusing on improving customer experience. And you know why they go to market so fast? Because we strongly believe in co-creation with customers. We don't waste time on thinking about big plans behind our desks. We bring it to the market and we go into dialogue with our customers. And we ask them what bothers them, what makes them happy. And we try to improve the products as we are sailing. That is the difference in execution strategy. Now, as always, actions speak louder than words. So let's have a look at one of these great teams. So Eddie, the floor is yours.
And thank you, Eric. As the first Irishman, may I formally welcome you as an Irish person. We've heard this morning of the opportunity for KBC in Ireland and of the innovative ways in which we will overcome customer inertia. And so I'm absolutely delighted this morning to be previewing our first mobile account opening application, which will allow a customer to open a new account with unique ease. But before I do so, I wanted to just take a moment and highlight some feedback from customers, some insights from customers, because obviously our starting point was to sit down with customers and ask them why so few had elected to move their banking relationship. And the results were quite sobering, but nonetheless, these are their words. And the first is that consumers in Ireland are not that interested in banking. Now, what they mean is that they see very little difference in product and the way in which it's provided. Secondly, again, a sober reflection, but they consider the account opening process to be a nightmare. They see excessive documentation, the use of their time as common complaints. And finally, is the fact that if they endure that process, we as banks fail to deliver against their expectations. We ask them to wait until the account has been made active, for their debit card to issue in the post, for the PIN to issue to be able to use the debit card, for mobile banking activations, and so on. So what was our response? And as Eric has just pointed out, we sat and co-designed a new process, a new digital experience for these customers, which we believe will set a new market benchmark. Because we will allow a new customer to open a new active current account in 5 simple steps, in 5 minutes, and to prove it, we'll credit the account with a gestural payment so that they can use the account immediately. And as Wim pointed out earlier on, because their mobile phone is available 24 hours a day, so too will we. We will be available to them in our contact centre to provide any assurance, assistance, or advice should they so choose. So I'm going to switch and actually preview this particular application now. Gavin is our obliging customer this morning, and we're going to show you how easy this is. So firstly, you'll see that we bring a challenger bank brand identity to life. This is the bank of you, and the concept of that is to not walk, talk, or act like a traditional bank. And I think you can probably agree that that is most certainly the image that sits in front of you here. But we have some initial introductory screens. So Gavin, first of all, goes through and sees what product parameters attached to the account that he is about to open. In this instance, the extra account. And on the next screen that he can choose to go through or bypass, he sees what we believe is the most fundamental point. We make a commitment to the customer that at the end of this process, he will have an active account with a digital debit card. In this instance, because Gavin's on an iOS device, Apple Pay, and active mobile banking. And then finally, in order for us to be able to fulfill this promise, what he will need to provide. In this instance, either a passport or driver's license, take a selfie, and he may need to provide a utility bill. So let's get the process started. So this is the first of 4 customer steps. The 5th is up to us as KBC to deliver. And you'll see that Gavin has asked for initial introductory details. So if you want to commence filling in those fields. At the top, you'll see a progress bar. So at all points in this journey, Gavin knows where he is in the process. Some tool tips highlight what specifically we're looking to glean from Gavin at this point. And there's a conversational flow. This, again, is a challenger bank approach. So at all points, he can enter in answers to those questions and edit if there's any typos or details that he wants to amend. And again, to show how available we are, there's a help button at the top left-hand corner so that he can immediately contact us if he is struggling or needs any assistance or guidance through the process. So now we're on to the second step. And because security is not only a concern for Gavin, but a primary concern to us, we have a prominent step to secure Gavin's device. So using the mobile phone number on the first step, we dispatch a unique SMS code, which Gavin can enter in now, and that binds and secures his phone or device. Now, secondly, not uncommonly, we actually prompt him to enter in his own unique 6-digit PIN. And this is for him to access or enter into mobile banking for future use. But also, we actually ask him if he would like to use Touch ID. so that he can simply, just using his thumbprint, go into the mobile application in future. The third step, Gavin, if you want to proceed, or are so willing, is to verify his identity. We want to ensure that Gavin is Gavin, because he will not be standing in front of us today. So you'll see here, what we're going to do here is take an image of his driving license, but we want to prompt him to take the best quality image to make sure that he's in the right light, and to take the full scope of the identity card. So if you want to proceed and take an image, this is using partner technology, which Wim referred to earlier. This is a company called ID Scan, which allows Gavin to take a photo of this particular ID, then to crop that image, to de-skew and make sure that he captures the image in the best possible light. And then it will represent to Gavin so that he can actually review that before he's submitted to this. In this case, it's a perfectly functioning image of his driver's license. The next step is a selfie. So again, prompting him through an interactive graphic to make sure that he's in appropriate light, that he looks directly at the camera, that he removes glasses or a long flowing fringe. Now, we don't need digital technology to know that that's not a relevant prompt for Gavin in this instance. And he will proceed and then selects, if that image is of a sufficient quality, he then can go proceed to the next particular step. Now, I'm going to stall you for a second, Gavin, if I can actually just point out 4 key things have happened in the background. There's a number of details which are being presented to Gavin, because we have taken his driver's license image and authenticated it using our technology partner. Secondly, we've taken the detail that's on that driver's license and represented it to him in tabular format, so he does not need to re-input the same details twice or produce any information that we haven't been able to secure ourselves. Thirdly, we've taken his selfie and validated that against the image that's on his driver's license. So we've used facial biometrics to match that particular image. And then finally, because his address is populated on his driver's license, we've gone off to another data provider and actually validated that Gavin does indeed reside at that particular address. So that's all we need from Gavin, bar 4 details here which we haven't been able to secure through another means. So Gavin, if you want to complete those final fields, this is nationality, marital status, date of birth, or not date of birth, but email address. So the final step in this process is to go through some legal and regulatory questions, as you would expect. But again, we're reverting back into a conversational form. So these are the final step in the process for Gavin. So again, have you tax reference numbers? Are you a US citizen, tax residency in any other country? But most importantly, have you read the terms and conditions? Are you familiar with the account parameters, etc.? So again, as he goes through that, and finally, marketing consent. Now this now I'm a little bit biased, but ultimately the magic. If he prompts the opening account, this is where we deliver, the 5th and final step. This account number that sits at the top is a real active account number. On the right-hand side, you can see that he can share that account number with his employer or other beneficiaries. Secondly is the debit card. That debit card is a real active debit card. It's issued digitally. In a few days' time, it'll issue to him physically in the post to give him comfort, but ultimately he will have the same functionality that attaches here. Thirdly, we can actually prompt him to add that card into his digital wallet. Again, because it's an Apple device, he can provision it into Apple Pay. And then at the bottom, you'll see he has his full access to mobile banking services. So we can go in, add, remove beneficiaries, change his personal details, and all the services that you would expect him to be able to benefit from. And then finally, we welcome Gavin to the Bank of You. This is where we actually give him the gestural payment of €5, where he can go and tap his device and make a payment, buy a cup of coffee, do what he needs to do to actually get the assurance that this account is active. And then finally, because NPS is critical, we want to track that experience so we can adjust and modify the journey if appropriate. And in this case, maybe he feels the pressure or the weight of expectation, but he has provided a very positive feedback. So that experience is actually a real account that has been opened. It sets a totally different and unique journey in the Irish market. It is instant, it is accessible, and it is proactive. Thank you very much.
So it demonstrates what we mean. Technology can enable a lot of things, but it's all about customer experience. Now, the good news for us is that, of course, we have the great team in Ireland here, but we have teams everywhere in Europe working that way. As Johan said, we do not have a central team of innovators. What we strongly believe is that everybody can take his responsibility on his own market. Everybody can create great customer centricity. So, actually, do we have a central team? Yes, we have a small central team. But what do? We promote customer centricity, first of all. We explain to people how great it is to make such nice applications. Secondly, we are actively looking for synergies in the group. If we see something nice developed in Czech Republic, we will promote it in Ireland. And as Wim pointed out, the mobile application of KBC Ireland was originally actually developed in Slovakia, made better here and adapted for the market, and deployed in Hungary. That is how we think about innovation. It is everybody's responsibility, and it is linked very firmly to the E of empowerment in Pearl. The last thing we do is, if people are looking for kind of specialists, data, artificial intelligence, whatever, we are happy to provide them. From every country, we have this kind of resources. That is the way innovation works in KBC. Now, what have we been doing in the last years, or what will we deliver in the coming years? First of all, we have been working very hard on an omni-channel model. Now, I'm sure you have heard this already before. Every bank today claims it has an omni-channel model. Did you ever see one? Wim referred to it, and also Dylan referred to it. Eddie referred to it, sorry. So, if you have trouble in the onboarding procedure, just push help and somebody from the live call center will contact you. That is really omni-channel. Let me go back to the example Johan gave. When we released the first step in the omni-channel, we had a discussion with a customer who wanted to open a loan. The discussion went with our KBC Live. This is our remote advice center in Belgium. Discussion went on, and finally they concluded that everything was okay. So the customer said, okay, so what do I need to do now? And the person in KBC Live said, yeah, you can sign the contract. It can be done in the branch. Or he said, yeah, it's actually a problem. I'm on holiday in Greece. But you know what? It's urgent. Please send me the contract by DHL. So we said, it's not needed. You have a tablet? Please open KBC Touch. That's the application we have. And you will find the contract already there. So customer opens the application, finds the contract, signs digitally, done. That is true omni-channel. Whenever the customer starts on one channel and continues on another one, there will be no friction in between. You can see later on the application of our Czech colleagues. They developed an application for co-investing. Customer is at home, sees all the data on his tablet. Our employee is in the branch, sees the same data on his screen, and whenever the data changes, they both see the changes. If the customer does an acquisition, the branch employee can follow. That is true omni-channel. And we implemented it in the last 3 years. So then a relevant question might be, if you implemented it, why are you going to spend so much money in the coming years? Why are you going to invest 1.5 billion? Now, first of all, we need to complete the model. We are adding transactions every day, and they become more and more complex, so they need a little bit more attention. We are going to bring the same model, for instance, to corporate banking. But there is another issue. More and more, technology is driving yet another change in the financial landscape. We see that more and more interactions are set up not between human and a machine, but between machines and a machine. Now, the first important steps which will be taken in that is PSD2. You know that the regulations ask the bank to open up their architecture for payments. That means that so-called third-party providers will be able to initiate payments from our customers directly into our systems and get information back to their applications. That requires that we are able to talk from so-called machine to machine. They send information, we process, and we send it back. In this model, we will open a new entry point which is called machine to machine. And that is also important for the future, because let me give you another example. You know that KBC is quite active in blockchain development. We developed a so-called digital trade chain for trade finance, but we are developing the same thing for other kind of transactions. Whenever such a transaction kicks in, we have to complete it and we have to send it back, but it is extremely important that at the same moment our customer can follow that transaction on his devices, and also our employees see what is happening. This so-called machine-to-machine interface we are building right now. For payments, it's already done. Everything is ready for PSD2, but we expect this to happen in other areas like, for instance, lending, insurance, and so on. The interface also gives the possibility to link with other applications which are not necessarily developed within KBC Bank or in KBC Insurance. More and more we see that the fintech industry creates separate proposals for customers which banks are starting to use. That can be in lending, that can be in insurance. And so we are preparing our system to team up, to link up with certain kind of fintechs. We did not choose a lot of partners yet. On the technical side, yes. On the financial part, not. But we want to be ready for the moment we decide to go into interaction with such a platform, be it on cloud. KBC is today already, for its O365, totally cloud enabled. We want to do that also for other kind of services. Why do we wait? It's a battlefield. It's not entirely clear who will win this financial battle. You know, fintechs, they are extremely important. They are changing the world. They are going to team up with banks, but a lot of them will not survive. So we are still watching and observing. We have some interesting contacts, but the moment we want to be ready, we want to team up, technically speaking, we will be there. Another investment we are making is our presence on social media. Maybe there is still an illusion in the financial sector that they own their distribution channels. Today already more than 40% of all the traffic kicks in by so-called non-owned channels. What is this? Social media, the GAFA, you know them. Maybe we should add some Chinese characters in that word because also Chinese are coming up very fast. And what is basically happening is that customers more and more start their journey on so-called non-owned channels, and it is extremely important for us to be present there. Now, how are you present there? That is increase, for instance, your relevance in a search engine. That's called search engine optimization. And we are heavily investing in that. And also their organization is important. We cannot do the marketing like we did 10 years ago anymore. Or also there we have integrated teams looking at how we can position ourselves as best as possible on all these social medias, in the search engine, and so on. Another step we need to take, and we are also working excessively on that, that is data. Data is quite important to fulfill the promise of personal in the approach of customers. If you want to give a personal proposal through a digital channel, you need to know the customer. And knowing the customer, that is a matter of interpreting the data you have. Own data, we do this already a long time ago. If you have to approve a loan, it's based on a data judgment, but also enriched with all kinds of data which are available. Government data, public databases, and so on and so on. So this is also one of the battlefields we want to open, or we are continuing to open, because we already have a quite large data team. What we basically want to do is to make sure that if we are getting contacts with customers, we have the analysis already ready. And I give you an example. We have some kind of digital advisor in KBC Touch, or tablet application, and suppose that you have a mortgage with a variable interest. Not very common today, but anyway. And this mortgage is at the moment that it needs to be reviewed. So the advisor will, inspired by the data processing we have, will pick this up automatically and get into dialogue with the customer, saying that today it's 5 years ago that you had a variable mortgage and you need to review it. What are you going to do? Are you going to prolong, are you going to shorten the payback period and keep the monthly amount? or are you going to lower the monthly amount? And that dialogue is very natural. And that brings me with another investment we are making at this moment, and which you will be able to see later on. That is interaction with customers through a machine interface, meaning what Johan referred to, Roboadvisor. So the systems get into a dialogue with the customer. What is your preference? How would you like to do it? And it understands the questions of the customer, even if these are deviating questions. That's emerging technology. There's a lot of training you have to do on it, but the model is able to capture the questions of the customers. The next step, very close to that, artificial intelligence. And let me give you another example. Today we have a claims app. If you have a small damage at home, you can take a picture and you can send it to the insurance. All this work behind it is still manual work today. People are looking at the pictures, they are checking in the contract whether this is insured, and then automatically it is approved. It goes fast, but artificial intelligence can make this better. What we are experimenting with today is that we look at the description of the damage and we check automatically in the contract by artificial intelligence and we match. And we can already in 80% accurately say that this is a covered issue or not. Now the next step is a quite simple step. You make a picture of the damage, you send it to KBC, the photo is interpreted by an artificial intelligence process and compared to the contract, and it says yes or no. These are the kind of investments we are making today according to data. But of course, I talked about legacy systems a while ago. Of course, our systems today are built for the last 10 years. They are quite monolithic, they are robust, but they are not always suited for the things I have managed. They are not suited for machine to machine. They are not suited to get in data from a blockchain, process it and give it back again. So we will have to do a lot of work in the back-end systems in the coming years. That is why we decided for Ireland to go to Temenos. And we will also do that for 3 other countries in the near future. For Czech Republic, for KBC, we are still relying on our current systems. But there is a lot of work to be done. We need to make it more modular, for instance, so that we can compose services whenever they are needed for a certain channel. Let me give you another example. Today, setting a price is at the very end of a process. If a customer quotes, for instance, for an insurance, then you have to go to the entire process, and at the very end, together with the contract, you get a price. In digital business, the first thing the customer wants to know, that is, what is the price? Or he wants to know it through a non-owned channel. So you actually have to take out that price component of your architecture, make it an independent one, make it serve the old part, and make it serve the new part. This is the kind of changes we are going to do over the coming years. As much as we need, not excessively, but on the rhythm of what our customers really want. And you understand, of course, that this will be quite an investment. So we announced that we will invest in the coming years 1.5 billion. Now let me give you a correct picture of this. If you invest, of course there are accounting rules which you have to follow. Part of the investment is taken into cost immediately, the rest follow a depreciation scheme, 3, 5, 8 years, depending. So if we take that effect over the period 2017 or 2020, together for the 4 years, this is more or less 1 billion. Roughly 250 million each year in cost. That is the translation of the investment toward the cost. How are we going to use it? The first we want to use is strategic growth. These are all these projects I mentioned. That is increasing, for instance, the experience when you underwrite a home insurance. That is increasing the experience when you have a mortgage loan. It's obvious that mortgage loans will be granted in a very, very short period. 44% is a strategic transformation I pointed to. That is replacing backends in some of our countries, making our monolithic systems more modular, opening them for cloud technology, banking as a service, and so on. And then 20% is dedicated to very specific legal changes and public changes we have to make, like IFRS 9, common reporting, and so on and so on. That is more or less the deviation in total. Where are we aiming at? course, we have made a planning, but the goal we make is we want to be ready whenever customers decide to switch from one behavior to another one. And we don't control how customers change to digital. We know that this will happen and that at a certain moment this will go fast. With some functionalities we already see it today. As we launch digital signing, it goes extremely fast. We see now that depending on the transaction, between 30 to even 70% of all these transactions are signed digitally by KBC customers. Yeah. So we don't know how the rhythm is going to go, and actually we don't want to push our customers on that, because after all, it is about experience, and also branches can still offer the right customer experience. But we think that in 2020, around 80% of all transactions will be omni-channel, meaning totally digital or assisted digital. And there comes the experience we have, because we think that omni-channel customers will be more loyal to KBC. And of course, an omni-channel transaction will most of the time be much cheaper than the traditional ones. Now let me go back to the omni-channel experience to tell you again how it works, and we will give you later on a demo on the online insurance. So, when you're looking for a house, I said typically customers start their journey, 40% of the customers start their journey in the non-owned channels, for instance in ImmoSite or whatever. But at a certain moment, customer is going to look for information in the KBC Touch application. So typically they make a simulation. How much can I spend? How much do I have to pay? How long will it take? And so on and on, some tax effects and so on. That is the start of the journey. At a certain moment, people still for a mortgage want to talk to somebody. They have a lot of questions. They do not necessarily want to go to the branch. A lot of them still do. Others maybe want to do it at 8 o'clock in the evening, Saturday morning, whatever. So they make contact through KBC Touch with the KBC Live, the contact center, and an appointment is made, and at the right moment, the two of them connect, and they have a chat through video connection. Questions exchanged, information exchanged, and so on and so on. So the next step is that they agree on the price, on the down payments, and so on and so on. Maybe there is some intermediate messaging over the mobile. I will skip that. But anyway, at a certain moment, there is an agreement. The contract is sent to the customer digitally. Customer signs. This is a mortgage transaction today in KBC, and it's going very fast. Now, let us look at the insurance. I told you already before that data and artificial intelligence can help us a lot in making lives of customers easy. In this case, we will show you what we do with data. Everybody knows that if you're applying for a home insurance, you have to fill in a lot of data. And it's the same like the onboarding procedure. Some of them you are really needed. But we also see that customers drop out of such a process in very large numbers. So we wanted to improve it because, as I said, fast, easy, personal. And we can do that with data. So we will show this now. So Ingrid is actually now typing the address. We might do that with geolocation if really needed, but anyway, this is the address, the number. Now, what is happening now is like in the onboarding procedure, we are looking up all kind of public data about the house which you want to insure. Then we are processing the data. We have some small questions left. So Ingrid will now answer these questions. So it's a terraced house. Okay, thank you. Now, what would be the next step? Watch. This is the premium. No hassle anymore. No nasty questions. No dropout of customers. All the information behind this proposal is processed totally automatically. Now you might want to add something. Typically, the garden is added. Okay, and you see the adjustment of the premium. And if you pay now, and this process is also open for non-customers. Yeah. So if you pay now, you're insured. So this is the insurance we want to build. And all our processes are going to be built like that in the coming years, if they are all not already on that level. Thank you. So, another example. Let's go to Bulgaria. What you see here is inspection of damage in agriculture, crops. And we do this by a drone. Why do we do it? Because we see that this inspection is very labor intensive and gives a lot of discussions, because it's difficult to have an oversight of the entire crop which is damaged. So we use the drone, get in the air, and make pictures with special cameras. We are looking at visual damage, but we are also inspecting other kind of damage, like is the crop still growing well, and so on and so on. This is implemented in Bulgaria. When we spotted it, we sent a team of people from Belgium to Bulgaria with the question, this is a great application. Please learn from it, bring it to Belgium. What might we use it for? We might use it, for instance, for inspection of solar panels. We might use it for inspections of fire damage on a house. We don't know yet where we are going to use it, but anyway, this is one of the applications we are building, and again, they follow the same principle. There is damage, we go on the spot instantly, we have a report instantly, and we pay out instantly. That is the way we are building applications today. So let me make the summary. Technology is important, but our goal, customer experience. Second thing, human interaction will still be important, but it will be complemented more and more with automatic advice. Third, we have built an omni-channel system, which is today running and which makes it possible for customers to choose the point of interaction and to switch the access point during the entire customer journey without any friction. Fourth, to do that, we need to change our architecture dramatically, and we will do that in the coming years. We will go from more monolithic to more component-based and to a totally open system which can interact with all kinds of ecosystems, either cloud-enabled or not. We will invest 1.5 billion in that, which translates in the coming 4 years in 1 billion in the costs. Most of all, I come back to the beginning. We are very much aware of what is happening in the world. And yes, we don't want to be disintermediated. But you know, we are not worried, because we can play that game. We are not going to be a bye-bye bank. Thank you. And of course, I have to introduce my colleague Rick, who is much better in figures than me, so all the nasty questions are for him. Rick.
Thank you, Erik. So good morning. Welcome to Dublin from Belgium then. I want to talk a little bit about capital. We aim to be one of the better capitalized financial institutions in Europe. That has been our aim, that remains our aim. And our starting position is actually, Our starting position is actually quite good, as you know. At the end of the first quarter, and I know most of you look at the fully loaded Basel III core equity target, our fully loaded Basel III full core equity target status was 15.7%. That is well above the regulatory minimum of 10.4, and that puts it in a comfortable position. You know, we have closed the acquisition of UBB last week, and for that we needed about 54 basis points of Tier 1 capital. So pro forma, we are at a position of 15.2%. We benchmark ourselves against a peer group of banks. We look at 12 banks. We do not disclose the name of those banks, but let me add that these are banks that are either active in the same geographical areas we are and or are following the same business model. That means retail banking, SME banking, corporate banking. When we do the benchmark here, you see that the fully loaded core equity tier 1 for our peer group, the median of that is 13.6%. And you see where we are on the line. We are not really outliers. You know, we are in good situation, good pack, and that's where we want to be. We are a little bit higher than the median, and the reason for that is also because we feel and we assess that we will be more vulnerable to the impacts of Basel IV than our peer group. Basel IV still comes with a lot of uncertainties as to the expected impacts and the timeline. And on the expected impacts, it's about calibration of the floor, level of granularity, and the calculation characteristics for the new standardized formulas on different risk types and different exposures. We took a 75% aggregate output floor in our simulations, and then we benchmarked that against our peers, and we came to the conclusion that actually the impact of Basel IV for us on a relative basis will be 1% higher than for our peer group. And a number of you have also written that already in your reports. So that seems to be the consensus. Again, relative basis, we think we will be 1% higher than the peers. And why is that? Basically two main reasons. First of all, we have a higher use of risk-sensitive internal models. We use the internal ratings-based method for 94% of our credit risk-weighted assets. And that is well above the average of our peers. Secondly, we have lower risk portfolios. And internal models typically lead to lower risk weights for banks with low risk portfolios. An example of this, for instance, for us is our mortgage portfolio in Belgium, which has much lower risks. We did a calculation for ourselves. Again, this is a preliminary estimation and based on the information in the market, so the 75% aggregated output floor. And we assess that the impact of Basel IV, plus some new regulations like mortgage floors in Belgium or the fundamental review of the trading book, we will need for that 3% of core equity tier 1. That is the range we set forward. If you translate it in risk-weighted assets, that is 21 billion euro in risk-weighted assets. If you look at the pro forma inflation of risk-weighted assets, and again, we take the end of 2016, we take into account the UBB pro forma, the risk-weighted asset inflation on the way that we simulated Basel IV for us would be 23%. So again, 3%, 21 billion risk-weighted assets, risk-weighted asset inflation pro forma of 23%. IFRS 9 is also something that we have made calculations on. We estimate now that the first time application of IFRS 9, and there we take into account both the classification and measurements of assets, which typically relates to the banking book, and impairments, and we use the pro forma on March 31st, 2017. And based on our calculations, on internal calculations, we come to an impact range of 45 to 55 basis points on core equity tier 1. As we have mentioned to you in the past, we will make a new assessment based on our 6-monthly results, so we will be able to tell a sharper number in August, and then in the beginning of next year we will come with the final number. So these are the two impacts that we take into account. What does this mean for us? We have an internal concept that we developed, which we call our own capital target. And the starting base of this own capital target is the assessment we do on an annual basis of the core equity tier 1 fully loaded of our peer group of banks. So this is the second slide I showed you. Again, this is a relative position. As this median core equity tier 1 of the peer group moves, this graph, this bar will also move. On top of that, in view of our higher vulnerability to Basel IV, we add 1%. And that's how we arrive at 14.6%. So for 2017, this is what we have as an internal target for our own capital target. Johan mentioned to you that part of our strategy remains to do M&A activity, acquisitions in our core markets. And of course, in order to be able to do that, we're going to need some capital. And that is what is added here. So if we take our own capital target of 14.6%, on top of that, we want to have a flexible buffer to be able to do M&A. A flexible buffer. This buffer is not carved in stone. This is flexible. We will assess that as and when opportunities arrive, and we will fill it up to the level that we feel comfortable with. So the maximum is 2%. Between 0 and 2%, it will be flexible. What does this now mean for our capital deployment? And for that, I gladly give you the word to Johan.
Thank you very much, Rick. What does it mean in terms of capital deployment next to potential M&A and then building up our own capital position? We come back to what we said already now for a while. That is, when we are looking into capital deployment, we are going to pay out at least 50% of the yearly profit, and on top, that's also something which we announced also earlier, we're going to pay an interim dividend of €1 per share, and the balance will then be paid obviously on the back of the full total year result. But next to that, we also, and it's a clear statement, we also will pay out on top of that 50%, every capital which is exceeding, so it's above the reference capital position. And as Rick indicated, the reference capital position is both a flexible, we want to be amongst the better capitalized financial institutions in Europe, but also dynamic and flexible one. So everything which comes on top will be, of the reference capital, will be paid out. Let me translate it differently. If we cannot make capital work, it will pay out. It will be paid out to shareholders without hampering our future, and that future is translated in being amongst the best and better capitalized financial institutions in Europe. Now, we provided back in 2014 also some guidance to the market where we think we will be going to in the next coming years. And we have updated that guidance as well. And we do it according to our strategy, a bit in the same way, but also a bit differently. So in that respect, we have some targets which I've now mentioned on the screen, which are given by over a period of 17 to 2020. So this guidance is applicable for the next coming years. In terms of our cumulative annual growth rate of our total income, we expect it to be somewhere in the neighborhood of 2.25%, cumulative annual growth rate. we do expect our cost-income ratio for the banking side to be 47% when you exclude the banking taxes. If you take into account the banking taxes, you come at 54%. The split up between the two is for obvious reasons. We are not in control of banking levies, banking taxes. We are in control of our own operational business. And therefore, this one is explicitly mentioned, 47% going forward next coming years. It takes into account the investment which runs through our P&L of 1 billion euro for the next coming 4 years. So therefore, 47% is something which we will be aiming for the next coming years. On the insurance side, quality-wise, the book remains of excellent quality. 94% is our guidance for the next coming years. But also, already mentioned, the conclusion of all of this is that our payout will be at least 50% of our profit going forward. And that is obviously, as of now, not by 2020. Some other stuff which is actually imposed upon us, that is everything which has to do with the regulatory environment. You know that our common equity target set by the SREP was 1040 as of 2019, that our Pillar 2 guidance was 100 basis points, also set by 2019. We had no problem with that. Then something which for some could be potentially new. This is known in the market yet. There is no fixed target set by the Single Resolution Board yet. We expect it to be there, cross fingers, by end of year. But what we know is on the back of a document which was issued by them 28th of November last year, we made some calculation according to the mechanical approach. And if you do the math, then you come to a 26.25% potentially target for KBC Group. That's one which we take into account when we issue that instrument. Now, keep in mind that KBC will always fill up the buckets of the additional Tier 1 being 1.5% and the Tier 2, which is 2%. We will fill those up anyway, anytime. The other ones which are here, capital minima, the liquidity minima, net stable funding ratio and LCR ratios, 100% as of now, also they're already in play. So actually, these are the ones which you potentially already knew. What is then different? The different one is obviously everything that has to do with our core strategy. Being a bank issuer means that you obviously have some targets, and some guidance in that respect is given today. Next to that, when we talked, we have been talking here today a lot about the changing digital environment, customer behavior, so on and so forth. So also there, we give some guidance what we are working for in the next coming years. All the guidance is given by 2020. So we're talking about bank insurance clients, which in essence means that a banking client is buying insurance products or vice versa, that an insurance customer is as well buying banking products. That's the core of our model. Now, the numbers are a little bit different, 2%, 15%, and international markets growing by 10% over a period of 4 years annually. It has to do with a different level in maturity. Obviously, Belgium is way ahead of some of the other countries, and in that respect, these numbers are based upon the starting position, which is different in different countries. There's also a little bit of difference in the definition. I don't bother you with the details. For instance, Belgium, because of the legal system, we take into account families, whereas in Central Europe, because of the legal system, we take into account individuals. But that's not too important. The importance is this is growing over time. Why do we make a difference between bank insurance and then something which we call, or what we call, stable clients? Why is that? What we do see, that's already there for that observation there for a very long time, when we do see that customers don't not only take one product, for instance a banking product, but they take on board at least one insurance product, they become more loyal to the firm. And that loyalty increases significantly when they buy additional banking and insurance products. If they have, for instance, 3 banking products and 3 insurance products, the churn drops with a whopping factor 15. So it's quite significant that customers who are willing to buy, let's say, all their products at KBC in whatever entity, that their loyalty increases significantly. Now, that is translated into these numbers. For each and every entity, a bit different, same reason, different maturity level, different definition, but it is going indeed further on our core model, on our bank insurance model. And then last but not least, we have some guidance given also on customers using the full bank insurance model, which actually means that they're going to use all the channels which are available, not only the brick and mortar, the bank branch or the insurance branches, agency network. So we expect that at least 80% of our customers to use them over time, ultimately by 2020. So this is mainly it. Let me wrap up. If I would summarize the full day, I would say, listen, we want to be what we were in the past. We want to be amongst the better capitalized, best performing, most liquid financial institutions in Europe. We want to be one of those institutions where customers have a great satisfaction and a great customer experience. So that's more of the same. But what we definitely are going to change is what all our colleagues have been showing here on stage, that is how the customers experience that in the new environment. And that new environment will be digitally inspired. So the differently is focusing on doing stuff in an easy, convenient way so that customers ultimately are extremely pleased with KBC and remain loyal to KBC. That's in a nutshell what we presented today. And the reason why we invited you to Ireland is that we didn't want to talk about it. We wanted to show you what we are really doing in practice. Because I think that one example, in reality, shown here on stage or behind the curtain immediately, tells you more than 10,000 words on a PowerPoint. At least I think it's more convincing than 10,000 words on a PowerPoint. Now let me end with something else. What do you really think about the bank branch? I mean, I can guess that all of you have some experience with bank branches. Some might consider it to be old school technology. Some still like it because they have great contact with their branch manager or their advisor. But, you know, we're a bit annoyed because the opening hours are between 9 and 12 and between 2 and 4. And guess what? You're in the office. So, I mean, taking a half a day off, that's a bit, that's not nice. Is that the feeling we all share? I see some people saying, yes, yes, that's what I have as an experience, indeed. Oh. Well, let me introduce you Sven. Sven is one of our colleagues. He's working in KBC Belgium. He had the same experience. And he thought, what if I could change that experience and make it more satisfying? What if I could do the same, but differently? Wouldn't that be better? So he thought, what would happen if I can create an experience which would please all of us? And within Pearl, where empowerment is key, he started to develop on his own a virtual branch. What would happen if you have the branch in your pocket? What would happen if you have that virtual branch on your smartphone? What would happen if you could really go on the screen and start walking around in the virtual branch on your smartphone? So he thought, what if I could take my smartphone, go into my branch, and walk around? Walk around in a branch and be confronted with solutions. With solutions which are KBC solutions, but which are tailored to my needs. What if, when you walk around in a branch, you approach walls, they give you information about your accounts, they give you information about your potential solutions, What if you're interested in those solutions, you just click on the wall and you're connected to either the call center of KBC, which is then focusing on the same stuff as what he is seeing on a smartphone? What if he's interested in buying a personalized, customized solution in his virtual branch, and he can do easily by clicking on the yes, I want to buy this? What if everything I said is not science fiction, but is even close to reality today? What Sven is showing is a prototype of a virtual branch, which is showing what we are possible of today. It includes every technology which we have integrated. Personalized, customized solutions, perfectly accessible solutions via call centers, but even more better, this is a prototype which brings you the branch in your pocket. Now, to fully explain this, it takes about 25 minutes, which I'm not allowed to. So therefore, we put the essence on a video. And the video has only one reason. It's just to trigger you. Because this solution is available in the innovation zone. And you can try it yourself. You can walk around in the virtual branch, prototype of KBC Group, Shares Obey, K&H, UBB. This potentially is a future for us as well. And this is due to Pearl and innovation. Let's show the video.
The virtual branch offers a 3D experience. It can be operated from a mobile phone or from a regular PC with keypad and mouse, or using VR glasses. It offers new opportunities over and above what KBC already offers in its physical branches: KBC Live and KBC Touch, KBC Mobile and KBC Kaching. A visitor can pay a virtual visit to an imaginary futuristic KBC branch and experience in an interactive and innovative way KBC's solutions, products, services and branding in a virtual new world. It's a unique KBC experiment, a brand new proof of concept that's still being tested. It will offer KBC new experiences that could be applied across current platforms and channels, and it can be integrated into services and products. It is a testimonial of how serious KBC is about innovation, exploring the many opportunities new technology has to offer. It was developed by KBC employees and shows the entrepreneurship and empowerment KBC's Pearl culture stimulates. This experiment is also another example of KBC's omni-channel approach. KBC continues to broaden its omni-channel offering to better and proactively serve its clients and anticipate their financial needs.
So, I don't know how it felt for you, but I always get goosebumps when I see this video. Let me start by, first of all, thanking Johan for the very inspiring summary of today's story and the strategy that we're putting forward to address the future and its challenges. I would also like to thank our other keynote speakers, Wim, Rick, and Eric, for their contribution today and their insights, of course. Today's visit to Ireland would not have been possible without the tremendous help of our Irish colleagues. They put an enormous time of effort and energy in preparing this. Since the 9th of February, we have had, I don't know how many calls, how many Skype meetings, exchanged hundreds of emails to make this event successful. So a big, big thanks, and I will look at my paper because there's a number of names that I have to mention. A big, big thanks to Dara, Barry, Des, Austin, Aidan, Audrey, Evelyn, Eddie, Gavin, Caroline, Ashley, Adele, Emily, and all the colleagues who worked very hard behind the scene as well, and also infected us with their typical Irish energy and enthusiasm, and I hope you also felt it today. And let's not forget the colleagues from Investor Relations and Group Communication, the innovation team and the innovation leaders in the different countries, who also made a huge contribution to today's event. You will also meet them later on in our innovation zone. And there's also Hannes, our global project manager, who was responsible for managing this project. Sorry for the extra gray hair that we caused you over these last few months. Finally, I wish to thank all the analysts, investors, journalists, and all stakeholders who followed this morning's presentations via live stream. This live stream ends now. So on behalf of KBC Group, I would really like to thank you for your participation and wish you a very pleasant day.